Individual stocks, just say no. Guys, just say no. Sure, there will always be those outliers like Apple. If you got into Apple in the beginning, yeah, you're sitting pretty. That's not always the case. Okay, leave me some comments, guys. How many of you have had success stories or horror stories from investing in individual stocks? I'll bet you there's a lot of you out there. Here's my story. When I first started investing, I went all in on individual stocks. I'm talking when I was 36, 37. I wasted a lot of time and money. Yeah, don't fool around with it, guys. Here are 7 reasons why you should not invest in individual stocks. First one, according to JP Morgan, they did a study on Russell Index, which is pretty much just a sample of stocks, United States stocks. What they found is that they can suffer from catastrophic losses. Almost half of them lost up to 70% of their value and never recovered. That's huge. Dare I say huge? Reason number 2, it takes a lot of time and research. Guys, unless you are willing to spend a lot of time investigating the company that you're investing in, knowing everything about it, all the ins and outs. A lot of times, like they just said in point number 1, these companies are not going to be there very long, which means your money could be down the drain. You just have to put a lot into it. If you're not willing to do that, do not invest in individual stocks. Number 3, volatility can be huge. Dare I say huge? You could be up 200% one day. You're like, hey man, I'm looking pretty good, little toasty, man. I am a stock trader. Yeah, go back in a week and then check on it. Volatility, guys, is all over the place with individual stocks. Hey, for those of you see me for the first time, my name is Duane, and this is a channel for people on moderate income. If that's something you think you might like, think about subscribing and like the video. Also, guys, Instagram, my Instagram channel is taking off. If you haven't gone over there and followed me, I got a link down here in the description. I appreciate it. Number 4, unlike a lot of other things, a lot of other investing, stocks can really be influenced by the personality of their CEO or the owner of the company. Okay? All it takes is one bad tweet from, let's say, Elon Musk. Check out how Tesla has totally gone up and down over the last couple of years, right? If you are not willing to deal with that, if you're talking about an index fund, don't have to worry about that. It's spread across hundreds, if not in some cases, thousands of companies. Individual stocks can really hinge on stuff like social media, okay? You got to be careful. If you have the stomach for that, okay, go ahead and do it. And you know what, guys? Overall, if you want to take a tiny, tiny part of your portfolio and invest in individual stocks because it's fun, do it. But I'm talking about a tiny, tiny part of your portfolio, okay? Especially for those of us on moderate income. Don't go crazy on this. The next point. Individual stocks, like I mentioned in my story, are especially bad for young investors. Why? Because they might get a big hit. They might get something that just took off for them, and they are making, 100%, 200%, 500% more on that stock than when they started investing. You know why that's bad? It's like gambling. You go gambling, the first time you win $500. How much more often are you going to go into that kind of behavior? Same thing with individual stocks. If you're young, you got all that testosterone running around in your blood, right? You're like, hey, I know what I'm doing. I'm going all in on 5 more companies. Guess what? According to our first stat, half of those are going to tank, which means half of your money is going to tank as well. The next reason I have for you, if you own a lot of individual stocks, you may miss the ones that are not performing well and just leave them in there for them to tank all the way down to 0 value. Yeah, there are some people that, I've talked to people that have 100 individual stocks. Is that a smart move? Not really, because they kind of get lost in the weeds, right? You're probably not going to be looking at this stuff every single day. You could miss some of those that really tank badly. Again, it's all about time, effort, and research. If you are willing to put all those things into investing, okay, try out individual stocks. If you are not, like I am not, don't do it. Here's the next point. Unless you really enjoy this type of investing with individual stocks, you will always be on edge. Okay, think about it when the market goes down. Just say you have a regular diversified portfolio. How you feeling? Not too good, right? Times that by 10 with individual stocks, all right? Unless you have the stomach for this, like a lot of my followers have, they could be 65 years old and they are still 90% in stocks. Unless you're one of those kind of people, you got to have the stomach for it, guys, or it's really just not worth it. If you enjoy this type of investing, fine. But I'm warning you, you will always be on edge with individual stocks, okay? Again, if you want to put a tiny, tiny part of your portfolio into individual stocks and play around with them, good. Just don't put too much in there. Okay, so what is the answer to this? Instead of individual stocks, what should you be investing in? Now, again, I am not a professional retirement planner. I am not a financial advisor. I am definitely not someone who's picked stocks and say, hey, this is hot, man, do it, okay? I have a lot of faith in index funds. Index funds, what is that? It's like 1,000 companies. You are broadly diversified in the stock market. Okay, guys, there's a lot of good index funds out there. And again, I'm not one to give you advice on stocks by any means, okay? If you want to just invest in stocks and you want to it's kind of a set and forget kind of option for you, index funds. Just look at the performance of the stock market as a whole over a decade. 8 to 10% returns, okay? We're not talking about individual stocks, guys. We are talking about the broad stock market. So what encompasses the broad stock market the best, I think? Index funds. Yeah, that's the way to go. Second thing that I really believe in, target date funds. Okay, these can be index funds, all right? In a lot of cases they are. I have most of my investments in the stock market in target date funds. They have served me well. Yeah, now some of you are going to go, well, yeah, the return on those, you can get so much better return. Well, yes, you can. But you know what? You can get a lot bigger losses too if you're willing to go riskier. Here's the thing about target date funds. They can be flexible as well. Just because you say you're going to retire on, I don't know, the year 2035, okay? Fine. Man, look, I'm talking about stocks. I don't have time for all this noise. I come out to what I think is a lonely road, and it always happens when I start recording, man. Traffic, all kinds of stuff. So apologize for the noise. That's why I'm talking a little loud, too. Target date funds, even if you're going to retire at, say, on year 2035, okay? Let's say you want to put most of your money into that 2035 target date fund. Doesn't have to be all of it. If you want to have some of yours be a little riskier, a little more stock heavy, put a 2045 target date fund in your portfolio. That's what I did. I have most of mine in 2025 target date funds. But I also have probably about 25-30% of my portfolio in 2035 target date funds. Why? Because it gives me a little more stocks. Those are 70-30 stocks to bonds, 2035. Sorry, I'm switching hands. That's why it gets all bumpy. My 2025 target date fund, which is most of my portfolio, is more like 60-40, even 55-45 stocks to bonds. So guys, you can play with it if you want. If you want a little more risk in there and you're younger, bump out that target date. It's that easy. Now, it's not set it and forget it, but as opposed to individual stocks, yeah, if you compare it to that, it is set it and forget it. Of course, you always have to check in, see how it's doing, right? So there you go, guys. when it comes to individual stocks, unless you have a lot of knowledge in the company that you are going to be investing in, unless you have a lot of knowledge in just stocks in general, I'd stay away from them unless you're going to just dabble in, $100 here and there. Okay. And as always, from the lovely high desert, we got this.